Hey traders, Nick here, looking into LUV, which is Southwest Airlines. Um, I got a question today asking me if they should go along Southwest Airlines. I do like the price action from the standpoint it is coiled for a move, and the direction of the move is still undecided. So I guess I could move this one this way. So basically, we have actually, I should probably move it this way because it shows a test of a neckline, which is not very good if it fails because then they shoot lower, and we'll look at the downside potential there. But also we have lower highs, so we have a descending pattern, so I can extend it this way now, which also creates potential. So we do have a tightening range with lower highs, essentially over midterm, bouncing on the floorboard. But shorter term, we have a range, like a box. I can build a box here. So ping pong between the tops and the bottoms. Which one will break, we'll soon find out. Today's candle, first of all, in the morning, the stocks were down tremendously, because at least 1% on UAL. I think Deutsche Bank downgraded either UAL alone or the whole sector. I can't remember, but they cut them from a buy to a hold, citing whatever reasons they had. I think price pressures, cost elevation, higher costs because of the higher oil, etc. So a viable reason, but let's look at the whole industry. All right, so today in the news was oil, which was, boy, talk about violent. MU and oil were the two stories today. So here's oil. I'm going to drill down to a 15-minute increment to show you the violence. Boom, look at that. Okay, so what happened? We had a level that we hadn't seen since 2014, so a 4-year high, and then collapsed on rumors that there's going to be a release from the SPR. The U.S. has a special oil reserve, and Trump of late have been begging all the OPEC members and putting pressure on them to raise their output in order to bring down oil prices. Higher oil prices may sound good thing, but only when it's because of demand issue, and not supply tightening. So he wants to bring that down in order to not put pressure on us, the U.S. consumers, because when I spend $4 and change for oil to fill up my car per gallon, it's going to take away from me spending somewhere else, and it hits every driving person, which is every working person in theory. So it's a real tax on actual spending. So the rumor came out again. It was a rumor. Boom. Oil took a hit hard. So maybe that eased some pressure off of the airline stocks, because UAL was down some 1%, the 1.5%, maybe 2% actually pre-market. It ended up a little better than that. And LUV, for example, is flat on the day with a doji. So if I go back to one-day candles, doji is an indecisive candle, meaning they opened, they tried to rally, they failed, they tried to sell it off, they failed, and they said, you know what, I don't know what I'm going to do, so let's close exactly where we opened. That's an indecision. Usually the next day, they take a move that's bigger than normal to make up for the indecision that they had, because they say, oh, okay, well, now that I know this, I can take it that way, and then they overdo it. That's the theory of a doji in plain simple English. So it doesn't tell you which direction, though. Especially a doji when it has equal tails. Whereas one that has a long tail, one way or another, may give you a clue as to what they want to do the next day, but again, it's not foolproof. All right, so is there a trade? Sure. They are cheap, I believe. Let's look at valuation. Last time I looked, they were in the teens. PE is 14. Now this is trailing PE, meaning it's actual results, not forward speculation. So it should be solid. And this is a daily chart. I'm going to go to a weekly to see levels. So this is the same line that I just fixed, and this is a line that I had drawn before. So now it looks like it's head and shoulder-ish, but not quite. The bottom line is they are testing a zone, which has been pivotal. What does that mean? This is a weekly chart now we're looking at. So it's 5 years worth of action. So if I look back, eyeball 4 years. Okay, back to program. So yeah, about 4 years worth of action, and this level is important. It's not a hard line in the sand, but more so a zone. So if I do this, you can see that this area is pivotal. First of all, this area right here, this area, which is exactly where we are right now, has been a pivot point, meaning resistance, 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 and finally breakout, support here, here, arguably here and here, and holding so far. But will it be support with a question mark? If not, they will breach it and overshoot lower, and this would be the target that I would see. This zone. Why? Because this is the heart of the zone that was well consolidated. What does that mean? So they fought over it for years before they decided to leave it behind. So it's established as support, and a whole bunch of trading happened. Look at all this volume that happened here. Okay, so if ever they fall back to it, whoever battled over it is likely to battle over it again. So if I missed it here and then saw it run, if it comes back to here, I'll say, you know what, I missed it last time, I'm going to buy it. Now this is all under the caveat that markets in general will hold up. The macro thesis is still valid. So this is what I will just say about levels. So what does that tell me? That tells me that I can take a risk on this stock anywhere down here. And the question that I got today, will I sell a put or credit put spread? Yes, I would. And I'll see if I can share some in the write-up as to where the actual premiums lie for this particular stock. I will also bring your attention to another one, which would be United Airlines. I had a conversation with somebody else on it, and same concept applies. Battle zone area, and if it fails, falls back to the other battle zone area, which is this one. Not as finely defined as LUV, but this one is also as cheap, maybe cheaper even. Because usually Southwest carries a premium. Yep, 10. PE is 10, cheaper. And I believe year to date it's doing better than Southwest. This is year to date. This is 1 year. So year to date is somewhere here. It's doing better because it's still positive, where if I switch to LUV, Southwest, this is year to date is negative. I can see it visually, it's negative. So better price action for a cheaper stock? Maybe UAL is the better way to go. They all trade in unison, and I can caution you over a developing head and shoulder pattern in UAL. Developing meaning it's not there, but I'm looking into the distance. I don't want to see this come back down and then lose this zone right here, because then it will come down to this area, which should be support, just for the same concept as before. So this is shoulder, head, shoulder developing, maybe. But regression line says that they could revert to the mean, which is about here. That's the mean regression line. Nothing will happen if the market is crashing. So if the market's correct, all of this will be, for waste. I don't go along anything based on their fundamentals alone without knowing that the macro is still valid. So for as long as the SPY, S&P, the markets are still poised to go higher or not very much lower, then all other trades will hold up. So that is the airline trade. So it really could apply to UAL, AAL, which is American Airline. If I go to a weekly, you can see the levels. So this one is given back a lot more. And yes, it's closer to, but it's lower. It's let out a lot of the froth than the other one, but I don't like the price action. Why is this doing this? I don't have a clear consolidation zone below it. I do have a clear bounce level, but I don't know. The other two charts seemed a little more orderly. You see what I mean? This is Delta, orderly. There's the breakout pivot point, just like Southwest, and it's in it. And if it loses it, it'll probably fall into this well-consolidated area and proven support zone. So I have visibility to where I would definitely be long it. I wouldn't mind owning it at 40. I don't know where the premiums are in the options market. But you see why I would say, okay, I would rather sell puts than buy calls and hope it rallies. Make sense? All right. So I'm going to delete that, whatever that is up there. All right. So Nick signing out on this airline trade. Oil prices are part of it, and they are high, and they will bring up costs. But I think that the airlines can pass the cost down to us commuters or flyers. I don't think I will cancel my plane ticket or decide not to go visit my parents or my friends or travel to see the world based on a higher ticket by a little bit. So this is the airline trade for now. Nick signing out.